Welcome back to Red's Roundup. In this video, we're going to be looking at why Michael Burry hates Tesla. Let's get into it right now. Quick overview. If you don't know who Michael Burry is, he's the guy on the left here. He was played by this guy on the right, Christian Bale, in the movie The Big Short, where Michael Burry shorted the United States housing market before the financial crisis in the last decade. So what's been going on now? Well, he's been on Twitter, and he's not happy about Tesla. He is not happy. He's actually short Tesla because he thinks it's a bubble. And we're going to see why coming up looking at a few of his tweets. So first tweet, Tesla Battery Day Edition, at Elon Musk, Bloomberg data, global autos, excluding Tesla, $2.3 trillion of sales, $100 billion of EBIT, $807 billion of market cap. Okay, keep that in mind. Tesla, $25 billion of sales, no EBIT, $438 billion market cap. And then Tesla's regulatory credit revenues are a melting ice cube. Global autos trade at 0.35 times sales, while Tesla trades at a little under 18. And that's a big discrepancy, which he does not think is warranted. So here we have the chart that table that he posted with that Instagram post. It's a little bit confusing. We're going to focus in on the key part here. Price to sales of global auto industry is, like he said, the 0.35. And then the price to sales for Tesla is at 17.84. And Tesla doesn't have any earnings before interest or taxes because they're actually getting tax credits. And that's how they've been making money, primarily in terms of their income statement. So let's move on to the next tweet from him. Tesla, at Financial Times, hashtag big read. Sales of green regulatory credits necessary for profitability, in quotes, flat revenues as tax credits wane / deliveries stagnate. Inferior lithium ion phosphate tech behind hashtag million mile battery means lower energy density / reduced range. So this is a pretty jam-packed tweet full of lots of information. We're going to break it down. So here we see him talking about the sale of regulatory credits necessarily for profitability. So that's the only, like we saw in the earlier tweet, that's the only way that Tesla is actually making money right now is from the regulatory credits. Now that might be a big deal to you if you like to invest in fundamentals. They are actually flat revenues, and then as these tax credits decrease over time, they're not going to be in a very good place, is what he's saying. And then he also goes on to talk about their technology in their lithium ion phosphate tech, and they're going to have lower / reduced range as compared to other batteries, and he doesn't think that Tesla is in the right when they're looking at their battery technology. And then key here, he posts hashtag bubbles, so he thinks Tesla is a bubble. Let's look at some of the charts that he pulled from the Financial Times article and actually put in his tweet. So we see here the operating profits in the blue, and then operating profits before the regulatory credits in the light blue. So blue, dark blue, operating profits, light blue, before the credits. So we see here the only reason they've been profitable for the past 2 quarters is because of the regulatory credits. And this might connect to something, because if you remember in the past few months and weeks, there's been big hype of Tesla being included in the S&P 500 because they have the massive market cap. That being said, a lot of people don't understand that the S&P 500 is actually based on what a committee decides, and the committee decided that Tesla would not be included. And I think this is a key point as to why they didn't include Tesla, because one of the requirements for inclusion is to have 4 consecutive quarters of profitability. And maybe they considered these regulatory credits to not be profitable, that they consider them an unprofitable business because they look at them before the regulatory credits, and they don't consider these regulatory credits. So this could have impacted their decision to not be included in the S&P 500. That's interesting, very interesting. Next chart here. Tesla's revenue charted in the bar chart by quarter, and then the revenue and the vehicles delivered charted on the blue. So the blue and the revenue are fairly tracking. They correlate pretty strongly, and you would say there's probably a causation between the two. And if we look here, they've been stagnant for a long time and definitely not increasing by 10 times over the past year, because that's actually what Tesla's stock price has done over the past year. It's gone up like 10 times almost. So if we look for the past 2 quarters, I know that we're in a pandemic, but if you look at what they should be doing, they're just relatively flat. They're not increasing. They're not really decreasing in any meaningful way, but they've just been flat for the past 2 years. And I'm not really sure that's something that you want to be investing in while it's trading at over like 1,000 times earnings. So these 2 charts are the charts that he pulled out as some of his reasoning for why he's short Tesla. I'd also like to remind you that Michael Burry is not afraid of investing in high growth stocks. He's not afraid of investing with companies with fairly elevated PEs and valuations. Compared to Tesla, though, that these companies have the intrinsic value to back up the price that you pay in the market. So if you look here, this is his largest positions. So he has Google, Facebook at his top 2 positions, making up over 40% of his portfolio at the moment. And these, not only are they his top positions, but these are options holdings. And I'd like to add to that these are high growth stocks that, unlike Tesla, have what it takes to make money. So when it comes to Michael Burry, he knows what he's talking about in terms of valuation. He's very well known in shorting stocks, so I would be afraid of investing in Tesla right now. And if you are a Tesla bull, I'd like you to leave a comment and tell me why you disagree with Michael Burry in the comments. So thanks for watching. Bye.